Dear students, I Dr. Pooja Sharma will discuss today the concept of dividend, meaning of EPS, parts of EPS and kinds of dividend paid by the company to its shareholders. Now let's start with the concept of dividend. Dividend refers to the part of profits of a company which is distributed among its shareholders. It is the reward of the shareholders for making their investments in the company. Dividend decision is very important for any of the organization because whatever the dividend company is paying, that can affect the profitability position of the company, value of the firm also as well. Dividend decision is very important for any organization to design dividend policy. Dividend policy involves how much profit should be distributed among its shareholders or reinvested in the organization. As you know, whenever any investors will make the investments, when they invest amount in the company, always he wants to get the maximum return of that. Like that, shareholders, whenever the company they made the shareholders made the investment in the company, they want to get higher amount of dividend, whereas management of the company tries to maintain profit, means retained profit for the future purpose. So the dividend policy of the firm mainly depends on the profitability of the company. Therefore, company should distribute a reasonable amount as a dividend to their shareholders and retain the rest of the profit for its growth purpose, future expansion purpose. Now start with the calculation of EPS. Before understanding the concept of EPS and DPS, you should know how you can calculate the EPS. EBIT and PBIT, this is the profit which is company will have after deducting all the expenses from the income. Interest is charged on the fixed assets. So after deducting interest from the EBIT, the company will have EBT. EBT is the earning before tax, profit or profit before tax. And company has to pay the tax on their profits. So after deducting the tax from the EBT or earning before tax, the amount which is left with the company, that is EAT, earning after tax. This is actually the net profit. If the company has planned to distribute the whole amount of EAT or earning after tax to their shareholders, so the formula will be EAT divided by number of shares. But suppose if the company will make any kind of contingency reserves and assume that company is having preference shareholders in their capital structure, so the company will make the payment of the dividend to the preference shareholders, and then company will deduct the preference dividend and the reserve amount from EAT, and whatever the left profit with the company, that will distribute among the shareholders and as a EPS. But if their company will not make any kind of reserves and company is not having preference shareholders in their capital structure, so the whole EAT amount will distribute among the shareholders. EPS is what? EPS is the portion of the company's profit that is allocated to each outstanding shares. EPS shows the health of the organization, financial health of the organization. Now, EPS is again divided in two parts, DPS and retained earning. DPS is the sum of declared dividend issued by the company for every shares. Dividend is what? That company is paying to the shareholders per share. You need to use both the concept EPS and DPS to determine specific information for the company, and both are the reflection of company's profitability. Now retained earning is what? It is the remaining profit of the company which company retained for the purpose of future expansion purpose. So the company should plan it very carefully what amount should be given as a DPS to the shareholders and what amount company should retain for the future expansion purpose. The company should distribute a sufficient or reasonable amount of dividend to their shareholders to satisfy them and to create the value of the firm, and to retain some amount of profit for the future purpose also. So this decision is again very important decision for any of the company, and company should plan it very carefully. Now, types of the dividend or forms of the dividend. First is cash dividend. A cash dividend is a usual method of paying dividend. In case of companies having cash dividends, the firms must have adequate liquid resources so that its liquidity position is not adversely affected by paying the cash. Shareholders prefer to receive, because whenever the company will pay the cash dividend and to satisfy the shareholders, because they prefer to receive the dividend in cash, because they invest that amount somewhere else to get the maximum return. But the same time, firm must have sufficient liquid resources to pay dividend in cash, so their liquidity position they can maintain. Now, second kind of dividend is scrip or bond dividend. A scrip dividend means promises to pay the shareholders at a future specific date. Whenever the company has to pay the dividend, so company needs to see the liquidity position. If the company doesn't have sufficient liquidity to pay the dividend in form of cash, at that very situation, company can issue notes and bonds for amount due to the shareholders. And the objective of the scrip dividend is to postpone the immediate payment of cash, and this kind of scrip dividend bears interest and is accepted as a collateral security. Now the next type is property dividend. Property dividends are paid in the form of some kind of assets other than the cash. But this kind of dividend is not popular in India, and this kind of dividend is given by the company under the exceptional cases only, exceptional circumstances. Now, the last kind of dividend is stock dividend. Stock dividend means issue the bonus shares to the existing shareholders. If a company does not have liquid resources, it is better to declare stock dividend. Bonus shares are shares issued to the existing shareholders without any charges. Whenever the company will make the dividend policy is one that maximizes the value of the shares also, and the form of the dividend company must issue bonus shares in this situation only. And whenever the company can issue plan the dividend, company can issue this stock dividend, this should be properly planned. So that's all for today. Thank you so much.